Good morning, traders. It is Thursday, March 12th. We are 2.5 hours before the open. Wanted to get this video out as soon as I possibly could. This is my Wednesday night swing trading video that I release immediately to my members. I typically wait until Saturday before I post it publicly to YouTube, but I wanted to post that to YouTube immediately. So this will give you some insight on how you would structure swing trades when the market is in a free fall. There's a lot of risk on either side. I personally feel that the upside risk could be equally as damaging because you're going to have these violent snapback rallies during this bottoming process that's likely to take place over the course of the next month or two. You can see what my rationale was behind each one of these trades. I think these trades will work out well, but I'm watching the S&P 500 futures. They're down about 120 points. There's been a travel ban imposed on travel to and from Europe. We have the NBA terminating their season early. All sorts of factors taking place. The exchange floors are talking about possibly closing. I don't know what that's going to do to liquidity. As you'll see in the video, the liquidity is already not good for option trading. So please watch the video, learn the lessons that I've put out there. Know that we are not doing any of these trades. We are 100% in cash by design. That's where we need to be. This video was designed so that if we got to trade on our terms 100%, these are trades that I would consider doing. So please enjoy it. You can track these stocks, you can see how they're performing, and you can see if you could get these spreads off and what would have happened given the market environment. Thank you, enjoy it, and know that we are not doing these trades. Good evening, traders. It is Wednesday, March 11th, and it is time for the weekly swing trading video. Been a very crazy week. I'd start off by going through our trades from the prior week, but we didn't have any. I recorded Tuesday night. Wednesday morning, I said, forget this. We're not going to do any of these trades. It's just not worth it. There's too much market risk right now. Market wants to head lower. That was a good decision. All the trades that I had up there would have been losers. There was no safe harbor this week. So we can take a look at the S&P 500. This is a weekly chart. So you can see the big fall that we've had in the last 3 weeks. Here's this week right now. We've been through the 100-week moving average. You can see the 200-week moving average here at 265. So that would be a natural support level. And we've got another support level down here. You can see this big bullish hammer, and I often reference these capitulation lows. Well, that's exactly what it looks like on a weekly basis. You've got this huge low that's put in, and the market reverses the whole way, and then you get that type of follow through. This is the kind of thing that we're going to be looking for in the course of the next month or the course of the next 2 months. When we get it, we'll see this kind of release. And I can't recall what this news was. It could have been, let's see, get the date on this. It probably was related to China trade war. So you can see the big sell-off. Oh my God, the world's going to end. No, not so much. The initial shock was pretty tough, but then we had this low here, and look at the rally since then. So a lot stiffer waterfall than this reaction right here. So this is a bit of a different animal, and we've got the virus is currently spreading. So I'm going to put up a couple of charts, and I'm going to talk about where the market could go and how we could possibly trade this. So first of all, if we feel that the market could put in a week like we saw last week, where we had a range from 310 on the SPY down to 275 on the SPY, that is a 35-point move. Another 35-point move from here would put us somewhere down in the 240 range. Now that's a big move, especially to get it back to back. But hey, we've got panic. People are seriously worried about this. It's all you can read about in the headlines. The spread is really starting to take hold in the US. So people are changing their consumption patterns. Schools are having students go online for their education. We've got all sorts of different sporting events like the Final Four, I think, might be canceled, at least as far as spectators. All sorts of things like that are going on. So it is going to get worse before it gets better. And if I take a look at a move of that magnitude, that puts us down to a major, major support level. Do I think it's going to happen in the next week? Honestly, I don't. But next week is quadruple witching, so anything can happen. I have to assume that worst case scenarios are going to play out. My first instinct in a market like this is not to swing trade at all. That's the best thing that we can possibly do. We need to let the dust settle. We need to be able to have some clarity. Then we can trade with confidence. So, in that absence, I'm going to have a trade that is absolutely so compelling that I can't stand it anymore. I've got to do the trade. I don't know if any of you have watched Pawn Stars at all, but it's a Vegas pawn shop. People come in with all sorts of great items. They evaluate it. They go, it's okay. It's in decent shape. I'll give you 50 cents on the dollar for it. That's the kind of deal that we need to strike right now. We really don't want to trade, but gosh, if you're going to give it to me at that price, how can I resist? So we're going to be looking at the best of the best. I've got some stocks that I've picked, and we're going to be using a very simple metric. We're not going to get all fancy because prices are out of whack, as you'll see. But the basic assumption would be I'm going to be looking at these stocks, and if they can replicate a week just like we had, that's what they're going to have to do to put us into danger. And if the market sells off between now and then, and we test that 200-week moving average and maybe go below it, fine. That's probably going to have to happen for us to get filled. But I still think we'll have so much cushion and so much room that it won't be an issue for us. We probably won't get filled on any of our trades, and we really need to get filled on these Thursday or Friday, because once we get into next week, we won't see those types of premiums. So I'm going to have that caveat on all the trades. We're only going to be doing the expiration a week from Friday. So we're not going to be going out far in time. And the expiration a week from this Friday is the March 20th expiration. So we're going to be using that expiration, and these trades will have to be filled by the close on Friday. So here are a couple of interesting charts that I want to show you. Let me load those up, and we'll start with this one. This is a chart that I displayed in the chat room today, and I'm going to try and make it a little bit bigger. Hopefully you're able to see it okay. This basically is the disease deaths per day worldwide. And yes, coronavirus is spreading, so maybe this count will go up. But you can see 56 per day, and here are all the other diseases that are currently out there and how many deaths per day we get. I believe that this is complete hysteria. I believe it's way overblown. And this shows you how many other things that you're more likely to die of than coronavirus. If you figure that China alone has 1.4 billion people, and I believe 3,000 have died, that's 1 in every 420,000 people in China have died from coronavirus. I'm not telling you to discount this. I'm not telling you to be careless, wash your hands, and do all the things that you're supposed to. But this is not a ticking time bomb for everybody in the country. It does not spread nearly as efficiently as the flu does. And they feel that the death ratio, or the death percentage, the mortality rate, is over exaggerated because China did not diagnose it properly early on. They didn't know how to treat these people, and it was already too late when they started treatment on them. So they said towards the end of their treatment, when they had their temporary hospitals up, that their cure rate was much higher, which incidentally, China has taken down all of their temporary hospitals. They don't need them any longer. President Xi just visited the city of Wuhan, where the outbreak started. So apparently, they feel it's safe for him to be able to go into an area like that. We're also starting to see a decrease in the growth rate of the coronavirus. And that's the next chart that I'll put up. Here you can see all the different countries that have the outbreak, and you can see how they're all declining with one exception, this purple line right here, which is the US. Our incidents are starting to increase. And that's also fueling the panic right now as people are starting to see it all over the country. But you can see how in Europe it's coming down, Iran it's coming down, South Korea it's come down dramatically. That's eventually going to happen here. It may take us 2 or 3 or 4 weeks. What does that mean? That means that consumer patterns are going to be changing. It means that there's probably going to be more panic selling, and there are going to be companies that are really going to get hit hard by this, and those are the cash late or the debt laden firms that are dependent on cash flow, like airlines, cruise ships, hotels, those types of companies with huge fixed overhead. Well, we're not going to be trading any of those. We're also not going to be trading any companies that require a lot of supplies from China. So I've handpicked these stocks, and I'll show you why I like them. We're going to go into the daily chart first. We're going to take a look at the S&P 500, SPY, and you can see there's the 200-day moving average. We came down last week. We blew through it. We rallied back above it, and the video, I believe, came out last week on, could have been March 4th. Well, we had an overnight gap down, and I know that I posted it everywhere. Do not do the trades. We don't want to do any of the trades this week, so you should have had ample notice not to do them. A lot of time to cancel the trades. Well, it was a good thing because we really sold off hard, and it didn't matter what stock you were in. They all got nailed. Almost every single stock got nailed, and it got nailed hard. So no safe harbor. Well, if I take a look at the virus and I start thinking about which companies should fare well, first of all, not a lot of supplies coming in from China. Second of all, not somebody that has to go out and be in a crowd to use your product. Lots of online companies. So Activision is the first one that I have on the list. And we'll bring that up. Gaming. Okay, well, I don't think gaming is going to go down. It'll probably go up if people are forced to stay home. They'll spend more time online and they'll play the games. So if I take a look at what the stock has done in the course of the last week, and I figure that it's gone from basically $62 down to about $57, I feel that it might have at very most maybe $5 of downside, but I really want to lean on that 200-day moving average right there. And we'll take a look at the fundamentals behind ATVI. Yes, you might not have known this. Option Stalker does have fundamental research. I developed this back in 2009, so that was during the financial crisis at a time when fundamentals were very, very important. You had to lift up the hood and you had to see what the company was doing. So you'll see for Activision, it's got a forward PE of 21, nothing outrageous, but here's what I like most of all. You have cash per share of $7.62. You have debt per share of $3.84. If they had to, they could pay off their debt with their cash and still have plenty of money to run their operations. I like that. They're not over leveraged. They've got plenty of cash on hand in case there's a short-term credit squeeze. So you can see great option liquidity, great fundamentals, decent PE ratio. Okay, plus we're going to go way out of the money on this. We're going to be selling below that 200-day moving average. So what I'll do is I will bring up the option chain. We're going to go out to the March 20th expiration, and we're going to be looking down, to that $54 strike price, but we'd like to go below the 200-day moving average. So that puts us at the $53 strike price and the $52.50 strike price. Here's the problem that I had all week. Here's the problem that I had today. I started looking at tons of stocks. You have no idea of how much time I put into this, racking my brain. What are we going to do? What are we going to trade? I've got to give people something that they can sink their teeth into this week. This is a very liquid stock and it has very liquid options. Look at these bid-ask spreads. 17 cents bid offered at $1.17. 28 cents bid offered at 90 cents. How the heck can you trade that market? You can't. So all we can do is say, if I'm going to do a 50 cents between the strike prices, if I'm going to do a 50-cent wide spread, I got to get a dime for it. And I'm willing to do it all the way down here. So this stock is going to have to take out the 100-day moving average, probably going to have to come down below 56.25. It could do that. We had a very nasty day of selling today. We hit a 52-week low today, so why not? Well, if all those things happen and you want to give me that spread for 10-cent credit and you want to do that between now and the close Friday, I'll take that bet. I will take that bet. And that's really the only way that we can trade right now. So I'm going to show you in the staged order screen. That order is already waiting for you. You can see sell the ATV March 20th, 53 put, buy the ATV March 20th, 52.50 put, do that for a 10-cent credit, GTC. Now that is our goal for this trade. So if you click submit, that order would be live. And actually, I'm going to have to go in and cancel this order as admin on my other screen. I'm using this as a user so that I can show you some of the searches and some of the time frames that have been taken out. I'm going to be putting in the maximum dollar amount. For instance, when we do the Google spread, there's 5 points between the strike prices, and we're doing it for a $5 credit. I need to bump this up to a 50-cent credit. The idea is I don't want you to get filled on this trade. I want you to have it submitted to your broker so that the next day you can take a look at it. You can adjust the quantity from one. You can adjust it to the credit that we're trying to get. You can evaluate the stock, and you can do so easily on their mobile app. Now, if you're online tonight and you want to just enter the trade, well, then you can just go right into the trade screen, configure the order exactly as you'd like it, and hit submit. Make sure it's GTC because I don't think your broker will accept a day order at this time, and it'll be working for you already in the morning. So you can do that also. So ATVI, just to recap, that's our first trade on the list. We're going to be selling the March 20th $53 put, and we're going to be buying the March 20th $52.50 put, and we're going to be doing that for a 10-cent credit. It's not going to be there right now, but look at these bid-ask spreads. How do you know where the heck anything is trading? 17 cents bid offered at $1.17, 28 by 90. That's how every one of these markets are. And you'll see, I'll go into Microsoft, one of the most liquid options you can trade. Same thing. So, with that said, let's go take a look at our next trade. We've got Facebook. Facebook really pounded down from $222 down to $170. Well, what's it done in the last week? It's basically gone from about $195, maybe $198 down to $170. Okay, well, the assumption that we're under right now is that whatever the market did in the last week, it has to repeat that performance in the next few days for us to get this type of spread off. Doesn't have to do anything quite that close, but it's got to drop a lot for us to get filled on this trade. So if I'm looking at how far out of the money I'd like to be on this, then I'm going to have to go down to the 140 strike. That's about a 30-point drop for Facebook, and it's about the same as it's done this week. So we would need another repeat performance. Does the market have that much selling pressure left in it right now? I don't know. Maybe. If it does, I'm going to take that bet. So we're going to go into Stock ER. We're going to take a look at the fundamentals on Facebook and why I might like it. You can see that it's got a forward PE of 16. Nothing outrageous. Cash per share, $19. Love that. Debt per share, $4.60. Fundamentals, 10. Nice. What about the business model? People going to be using Facebook less? If we have a coronavirus outbreak? No, they'll probably be keeping in touch with friends and family on Facebook. They'll probably be using it more. Facebook going to have supply issues from China? No, they'll probably tell all their employees to go home and work from home as much as they can. Okay, I feel pretty good about that business model. I feel pretty good about this trade. It's one of the biggest market cap stocks that we have. All right, so let's go do that trade. We'll put that up, and I just want to make sure that I've got the right strike prices so that it matches what I've got in the staged orders. And there you can see the Facebook sell the March 20th 140 puts, buy the 139 puts for a $1 credit. So we'll go in and configure that. I'll show you how to do that. Go into the March 20th expiration, and we're going to go down to the 140, which the blue dotted line also tells me that the 140s are 2 standard deviations away. Okay, that's nice too. I like that added protection. So we're going to sell the 140 put, we're going to buy the 139 put, and we're going to do this for a credit of 20 cents. That's because there's $1 difference between the strike prices. So I like Facebook. Let's take a look at our next stock. Google. Google has basically fallen in the last week, from this 100-day moving average, which is roughly around 1,400, down to roughly around 1,200. So it would have to give us a repeat performance this week, and it would have to go down to the $1,000 mark on Google. Can it happen? Why not? Sure, it can happen. So we're going to go into the option chain, and we'll take a look at that spread. And we'll go into the March 20th expiration. I don't know what's going to happen during quadruple witching. I only know that if you think this trading has been crazy, wait till next week. We could see some really wacky stuff happening next. Usually Tuesday or Wednesday of quadruple witching tend to be the wild day when you've got a lot of position squaring. So that $1,000 put, we're going to sell it. That $9.95 put, we're going to buy it. Look at the bid-ask spread on this. $1.95 bid offered at $5.80. The 95s. $2.60 bid offered at $4.70. How the heck am I supposed to figure out where this spread might be trading? You can't. And what the market makers are doing, they basically have everything on auto quote, and they have you over a barrel. They do not want to trade. When you have bid-ask spreads like this, it tells you they don't want to trade. They don't want the risk, but if you're willing to do it at their price, then they're willing to. So they've got algorithms, and they run probably between these bid-ask spreads. We don't always know where they are. We need to have a very quick market drop for their algorithms to get a little bit out of whack and to give us the opportunity to get into this trade. There's not a chance it will be trading against a retail trader at these levels. Almost has to be done on their auto quote. They have to look at it, assess the probability, decide it's a decent trade that they want to do. Then they'll take us out. We're counting on the market falling, stabilizing, and then either running higher or at least being able to hold that point. So that's our spread that we're going to be doing on Google. We're going to be selling the March 20th $1,000 put. We're going to be buying the March 20th $9.95 put. And this is $5 between the strike prices. So we're going to be doing this for a $1 credit. But you can see those wide bid-ask spreads. I don't think I went into the Google stock ER here to see where it's trading. Forward PE of 20. Okay, that's reasonable. It's a high growth company, very high growth company. You can see cash per share, $174, debt per share, $46. They're not going to have any liquidity problems at this company. If they've got to shut down for a month or two or three, have their employees work out of home, they got plenty of cash to get through this. No problem. And that could be a problem for a lot of companies, but it won't be a problem for this one. Are they importing a lot of goods and supplies from China? Any supply chain disruption problems there? No, none there. What about their consumers? People going to surf the internet less? Have less advertising on the internet? No. They going to watch YouTube? Oh yeah, they'll probably watch more YouTube than ever if they're home trying to avoid crowds. Really good option liquidity. excellent fundamentals. That's the kind of company that we're focusing on right now. Make me a compelling offer and I'll do the trade. Final one, Microsoft. Again, not a lot of supply issues there. They've got gaming software, computer software. They can have a lot of their employees working remotely. I don't see a lot of supply chain issues with them either. It's been strong relative to the market. Let's go in and look at that stock ER. And here you've got a forward PE of 25. You've got cash per share of $17. Debt per share, $11. Excellent fundamentals. I don't see any problems with Microsoft either. And if we take a look at how far the stock has fallen, you can say it's come down from $174 down to about $153. So we need to go about 20 points out of the money on this. We need to go down to that probably 135 strike would give us plenty of room. And I think I've gone even lower than that. So we're going to bring up the option chain here, and we'll go into staged orders. We can see the staged order here to sell one Microsoft, 133 put, buy one Microsoft, 132 put, and that's already at $1 credit. So we'll go in and take a look at those option chains, and we'll go into the March 20th expiration, and we're going to that 133, 132. I'll click on that, and I'll click on that. Microsoft options usually trade in a penny wide market. Look at these babies. $1.09 bid offered at $1.63. $1.02 by $1.53. It's crazy. You can't even trade options right now. That's why I've been telling all of you, don't trade options. Trade the underlying stock. You cannot deal with bid-ask spreads like this. You just have to trade the underlying. So let's recap this trade. We're going to sell the March 20th 133 put. We're going to buy the March 20th 132 put. And we're going to do that for, you should already know this, we've got $1 between the strike prices. We're going to be looking to do this for a 20-cent credit. So those are all the stocks that I have for you this week. I went through and I looked at, tried to get creative with a bunch of stuff. I tried to look at a lot of different companies. I look for relative strength. I look for technical support levels. The bottom line is you've got to pick companies right now that have very little debt, lots of cash because they may have to hanker down, trade at a reasonable PE, and whose business models are not going to be impacted by the coronavirus. And in all of these cases, I think for sure Activision, Facebook, Google, I could argue that a coronavirus shutdown would actually help all three of these because people will be using their products more. And I believe the same would be true for Microsoft as well. And no supply issues, so no supply chain issues as well. A lot of cash to hanker down during this really tough period. I believe that you're going to see some additional selling because we're going to have coronavirus spreading in the United States for the next 2 or 3 weeks. Personally, I believe that once it's all over the place and everybody kind of gets used to the idea that I'm still standing and it's been everywhere, we've got outbreaks all over the place, that everybody takes a deep breath and they start seeing that there are not that many fatalities on a percentage basis, and 80% of the people don't even show any symptoms or very few symptoms, and they fight it off naturally. So it really impacts the elderly. Obviously, the nursing homes, healthcare facilities, they're on the front line right now. And, my heart goes out to all those people. But the mass hysteria that's been created and the market chaos, I think, are way overblown. But you can't judge fear and you can't judge panic. And part of the problem for all of this, keep this in mind, when you have a waterfall event like this, and I said this to you last week also, this massive, massive selling that came in, this was partly because asset managers were underhedged. This was partly because we had extreme bullish sentiment. It was the perfect storm. We knew about coronavirus back here. Blip. It's not going to be that bad. And the market ran higher. And I've been mentioning it. since January that this could be the type of event that cracks everything. Well, wisely, we were out. We got out of everything. We had to ride this storm a little bit. We pulled back to the 100-day moving average. We even had some bullish put spreads, and I used this same tactic that I'm using today. Those 4 bullish put spreads expired worthless. Okay, that was nice. We generated some income on it. But wisely, we just stepped aside last week. I'm trying to step aside as much as I can right now. That's the mode that we need to be in. We're going to get lots of clarity in the next 2, 3, 4 weeks. We've got earnings season coming up. We're going to have some corporate warnings coming very soon. Companies have not been able to gauge what the economic impact would be or what the impact on sales or the bottom line will be from this. But we'll have that clarity probably in the next 2, 3, 4 weeks. We'll start getting it in. Then we'll be able to assess everything. The spread rate for coronavirus in the US should start decreasing by that time. Everybody take a deep breath. Once we start having all of that, oh man, are we going to have some great buying opportunities. And we need to keep our powder dry for those high probability situations. That's not now. The only way we trade right now on a swing basis is if they hand us a trade on a silver platter, way out of the money at our price, then we'll take it. Day trading wise, beautiful. We've been trading stocks with relative strength and relative weakness, and we've been playing the market reversals intraday. That's really the way to go right now. So take a deep breath, everyone. Things are going to settle down very soon. You've got your marching orders for the week. If these trades are not filled by the close on Friday, we're going to cancel them because that would mean that we're filled next week, Monday, Tuesday, Wednesday, and that would mean that in order for us to get filled at those time periods, at that late date, that those stocks are going to have come in really, really hard and really fast next week, and they'll be close to the money, and that's a risk that I don't want to take. Right now, we get some more panic selling today and tomorrow. I'm okay with that. Give me that spread, and then we can manage the trade. Once we get into next week, we'll have accelerated time decay working in our favor. So cancel these orders by the close Friday if we're not filled. If there's anything super important that you need to know about regarding these spreads, I've got all your email addresses. I'll send you out a special alert telling you not to do the trades or which ones to avoid. If there's anything that really requires your attention, I'll communicate that way. I'll also post bulletins right in Option Stalker as well. Thank you. Have a good night. We'll see you in the morning. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.